Good afternoon. Good afternoon. It's Monday, the 9th of December. Welcome to another edition of Monday Market Picks. This is Thilan Wickramasinghe, the head of research for Maybank Securities here in Singapore. Stocks in Asia are starting the week in the red, pulled down by more political uncertainty in Korea and the volatility in Syria. Oil prices are climbing and everyone is still waiting for that Chinese stimulus. Well, one place that's doing pretty well is Singapore, where the MSCI Singapore Index is the best performing index in Asia. The banks have helped, but GLC reforms have also provided quite a bit of support there. We have Jarek joining us to explain why his new pick is going to be one of the biggest beneficiaries of reform. Another stock that could benefit is Singtel, and I'll explain why. Are Vietnamese banks like durians? Stay with us and I'll explain why that is. We also have Amirul, the chart guy, joining us with two buy ideas today. And last but not least, we have Bryson in the studio from our partner Wedbush Securities in the US to talk to us about NVIDIA, TSMC, and everything US hardware. Stay with us. Now, let's start with Jarek. Jarek, welcome to the show. Jarek, now Singpost has been signaling a very aggressive restructuring agenda with asset sales and cutting debt, but S&P has just downgraded them on credit watch. Jarek, can you give us some background as to what's going on there?
Sure. So I think the main thesis for S&P putting them on negative credit watch is that because they are selling the Australia business away, that is their core main growing business. So without that core main pillar, S&P is worried that going forward, without this core main pillar, earnings and cash flow will not be stable, and that's why that will affect their debt repayment. But we do not think this is a concern at all, because after the acquisition, after the disposal, basically they'll have 1.3 billion of cash and they'll turn net cash against 1.1 billion of debt, including perpetuals. So basically, we do think that there's going to be more asset monetization going forward. That will actually, and they also pay down their debt as there's more monetization going forward, as long as the assets are monetized. And with that, we do not think that it's actually a concern at all. Going forward, we also do think that the focus should be on asset monetization more than earnings growth or anything like that. And that we do think that the total asset being monetized could actually be more than its current share price.
Okay. Now, past restructuring stories in Singapore has delivered 18 to 150% sort of shareholder returns. Jarek, what makes you think that Singpost can really deliver this?
I mean, Singpost has done well so far, but we do think there's more upside ahead. I mean, if you look at what assets do they have, if they still have Singpost Centre, which is worth over billion, they still have 20 out of 40 of their post offices that they own, which we estimate to be about 300 million. And they still have Famous Holdings, which is the freight holding business, we estimate to be about 80 to 100 million. So with that, and together with the 900 million Australia sales, we do think that there's still much more value to Singpost. Our SOTP valuation is about 86 cents a share after paring down debt, and we still think that there's ample upside to the current share price level.
Okay, so what should investors do now, despite the S&P credit watch?
I mean, we think that if any decline in share price, any drop in share price is actually a buying opportunity. Any weakness can actually accumulate, because we do think that with this Australia business already being there's an agreement of it being sold, we don't see any rejection in that deal, as a majority as their major shareholders like Singtel is also doing is also monetizing their non-core assets and returning value to shareholders. So this and Singpost is actually considered a non-core asset for Singtel. So we do think that if you look at the board of Singpost, the chairman is actually on the board of Singtel as well. So we do think that he will be the one to push for more dividends for shareholders. And next, the second largest shareholder is Alibaba, which is also wanting to get cash back, to buy back their own shares and also return to their own shareholders. So we think that there is actually a great push towards monetization. And with this core growing business being sold, eventually we do think that in the next 1 or 2 years, most of their non-core assets will be actually monetized, and proceeds will likely be returned to shareholders as well.
Got it. So we've got a buy on Singpost and got a target price of 77 cents. There could be more upside than that with dividend returns as well. That was Jerick. Thanks, Jerick. Now, when you think about Vietnamese banks, you don't usually think of durians. Matt, have you had any durians while you're here?
I've tried durian. I'm not trying it again.
Yeah, there you go. That's exactly the reaction a lot of people have about durians. And Quan Tan, our banks analyst in Vietnam, says that that's how investors will see them, see the Vietnamese banks next year. Either you love him or you hate him. The sector has delivered great growth between 2019 and the first 9 months of this year, despite tight credit growth as well as NIMs. But for 2025, we expect growth to actually turn uneven across the different banks. NIMs will be under pressure, and only the few big banks will be able to actually manage that from a position of strength. Also on the cost side, again, you're going to see a big difference depending on the size of the bank and also how they will navigate the overall cost pressures. So for 2025, Tan says to stick with the Musang Kings or the best durians that are out there. This means buying banks that have competitive valuations and also that have a very strong capacity to grow. He says to ignore the banks that have fairly conservative strategies going into 2025. So his top picks are Techcombank, VCB, MBB, as well as VP Bank, which he has a trading buy on. Now, talking about trading buys, let's bring Amirul, our chart guy, onto the show. Amirul, welcome.
Hi, Dylan. Thanks for having me in the show.
So great to see you. And so what have you got for us today?
All right, so I actually made two buy recommendation for today. So the first one would be discounter, WeHur. So for WeHur, it actually made an interesting breakout last Friday. So if I draw like a curve line from here to here, and another curve line from this point to this point. In technical analysis, this is what we call a cup and handle pattern. And last Friday, it just made a breakout right above the neckline pattern over here. Yes, today, this morning, we could see that the current candle is making a pullback, but it also is actually testing the current resistance line from this October high over here. So I believe that given the current momentum and given the current upward movement from this morning, even though it faced a mild pullback towards the end of the session, I believe a breakout above this line over here, which is at 0.505, would signify a bullish continuation move. Next recommendation would be Hong Kong Land USD. So for this stock, I actually recommended this stock because it made a interesting breakout last Friday. So if I draw a line up here, and if I draw another line down here, so this is what we call a bullish rectangle breakout. So momentum has built up last Friday as it breaks out above this pattern with increased volume. Based on this morning movement, it actually made a minor pullback, but it still maintained above the resistance line over here, up this upper rectangle line, upper resistance line over here. And it also managed to maintain right above this blue line over here, which is the 21-day EMA. So I believe as long the price maintains above this blue line over here, bulls maintain at the advantage. And based on this morning's price movement, I actually see, if you ask me based on this morning movement, I would recommend investor to check out OCBC Bank as well, because it actually made an interesting gap up this morning with nice volume. And it's also actually testing its current high or its current resistance line over here. So if you could break above 16.50, this will be a nice bullish continuation sign as it's still in the uptrend phase. So that's one from me, Dylan. Over to you.
Thanks, Amirul. And OCBC, we have a buy on the stock on a fundamental basis as well. So do have a look at our report there. As I mentioned earlier, another stock that actually will benefit from this whole GLC restructuring is actually Singtel. The stock has done pretty well this year, mostly from their capital recycling program. They've got about $6 billion of capital recycling that they plan to do under their Singtel 2028 program. They've done about 2 billion now, so about 4 billion more to go. And they own 22% of Singpost. So if Singpost actually does their restructuring, recycling, that means additional dividend streams coming into Singtel as well, as Jarek mentioned. So additional cash flow coming into Singtel. They will also be generating quite a bit of free cash on their own. They're recycling capital. Husseini, Singtel analyst, thinks that there's about $4 billion of excess capital, even after they finished all their capital recycling and returning money to shareholders. So there is another 4 billion of extra capital that can be potentially returned. And we think that at least some of that will be given back as share buybacks as well over the next couple of years. So that's another key strength for Singtel. So do look at our report on Singtel in today's newsletter. Now, let's turn to Matt Bryson. Matt is Managing Director and the analyst covering enterprise hardware at Wedbush Securities in the US. As you know, Wedbush is our US equities partner. He has seen it all through the cycles, and he regularly travels to Silicon Valley and Asia to keep abreast of what is happening in the tech value chain. Now, Matt, you've been traveling in Asia lately, so let's start there. What are investors saying? What's investor sentiment like for US tech hardware?
So I think it's mixed. I think that everyone is still very optimistic around AI and the AI supply chain, but you step away from that area and generally both investors and the companies I met with are relatively pessimistic. So there's not really a pickup in consumer spend, which has been hoped for. Still high inventories of other semis away from AI, and then businesses still aren't spending. So generally, I think outside of AI, people don't feel that great about things.
Right. So AI is still the biggest game in town, and we'll talk about that. But I want to talk about another one of the biggest elephants in the room, Trump, and the potential tariffs. How do you think the tariffs will impact the hardware value chain?
Yeah, so what we're seeing right now is start to hear the PC makers in particular are pre-buying and pre-building components and systems just to ensure they have some inventory if we do see these tariffs. The problem is, from my perspective, what Trump says and what Trump does are two very different things. Our former president has tended to really try to make the popular choice. And the least popular thing in America over the last 4 or 5 years has been inflation. And the problem is if you put 25% tariffs on Mexico, you put 25% tariffs on Canada, you put 10% tariffs on China, you are creating a significant inflationary pressure. And so I'm not sure if it's bluster or if it's real policy. And I think the hardest thing for companies over the 4 years of the Trump presidency was it's really hard to do business planning when you just don't know what's coming tomorrow.
Yeah, exactly. And I mean, I guess the other side of that coin is China as well, right? I mean, China's trying to revive the economy. They're all, and there is this fear that, there will be a lot of trade. There'll be a lot of trade war with the US and China. And China recently declared that US chips are unsafe and unreliable. What immediate and long-term effects do you think that's going to have in the overall global semiconductor market?
Yeah, so I think the difficult piece for China is there's not a good replacement for a lot of US products, right? So there's not a good compute product out there. Certainly on the handset side, could you see a bit of a shift from Qualcomm towards MediaTek? I would guess that's a possibility, but in a lot of areas, and particularly server PC compute, you just don't have alternatives. And we've seen that problem on the AI side of things, right? Huawei can't fab enough high-end AI processors because they just don't have the foundry capability. So I don't think it matters that much in the near term. I think in a longer term perspective, China is trying to build its own supply chain. What my dad always says to my wife whenever she wants to do a project in the house, and she asks, can we do this? His response is, if you have enough money and if you have enough time, you can do anything. China has lots of time. They've got lots of money. So I think over the longer term, they've set themselves up to build their own infrastructure and eventually they'll get there.
Right, right. So shorter term, slightly more US centric.
Yes.
Okay, so we can't not talk about NVIDIA.
Yep.
As you said, AI seems to be the sort of main sort of focal point for a lot of clients. So what are your views here? And what I want to add right now is that everything AI right now is just NVIDIA, but what is happening outside of the company? Who do you think are the second liners?
Yeah, so I think right now the clear kind of alternatives are custom built chips at the large cloud service providers, at those hyperscale customers. So certainly you've seen Google have success with its TPUs. You've seen Amazon have success with Inferentia and Trainium. They turn to Broadcom, Marvell, Alchip as their partners to build these products. And so I think those are the best alternatives in terms of growth. Beyond them, the closest product that you see to what NVIDIA is offering right now is AMD's MI 300, soon to be MI 350, MI 400. I think AMD is positioned to have 5 to 10% of that market, which is where they are right now. So I think they have a decent growth path ahead. Having said that, it's really hard to get a feel for where AMD is exactly at this point in time. They don't, with NVIDIA, you can use the supply chain as a proxy because NVIDIA is so large.
Yeah.
With AMD, you don't have as strong data points. And so where I think AMD is better positioned, where I get more visibility, is they're clearly taking share from Intel on the server side, on the PC side. I think people don't notice that as much, but it creates a pretty nice revenue growth path for AMD into 2025, 2026.
Got it. So do you actually think, Amazon building their own chips and Apple's coming on board as one of Amazon's Trainium customers, do you think that's going to have that shift away from NVIDIA and the market will?
So I think over time, what you've seen so NVIDIA offers you a GPU. What GPU is very good at is very flexible. Right? And AI is in its infancy. And so you want lots of flexibility because you don't know exactly what things are going to look like in 2 years, in 5 years, in 10 years.
Right.
Now, having said that, all of these large companies, they have sets of problems that they're dealing with that they understand very well. And what you can do that can create efficiency is you can build an ASIC that takes that software and turns it into hardware. And so I think for areas that are specific to problems that they have that they understand very well, they will use their own products to deal with those problems, and so that will siphon away some demand from NVIDIA. But at the end of the day, I think that AI is the next building block, and so there's enough of that pie for everyone. NVIDIA has created such a lead that it's hard to see them doing or losing their leadership over the next 3, 4, or 5 years, and they will do very well. But Marvell and Broadcom, I think, will do very well, and I think AMD will do very well.
All right. Okay. So quite a few names to look at overall. Now, what about Intel? Are they going to catch a break?
So the problem with Intel right now is when you get rid of Pat Gelsinger, then what you are saying is your plan to catch up in the fab process isn't working. The core strategy for Intel for the longest time was we lead in process and we lead in design. And the thing is, those two are complementary. The better you are at manufacturing, the easier it is to hit your design targets. So if they're not catching back up in manufacturing, they've got a really tough task ahead of them. You look at their core markets right now, PC is their biggest market. The PC market is not strong, right? That's the consumer weakness I was talking about before. The industrial market's not strong. The auto market's not strong. So you look at their other products, whether you're talking about their FPGA business with Altera, whether you're talking about Mobileye, even if you're talking about the work they do in telco, those just aren't strong end markets. So they're struggling with share loss. They're struggling with their ability to catch up competitively. And they're struggling with poor end markets And so I just don't know how they get out of this cycle. And then the problem is, even if you bring in someone who looks at it and says, I can create shareholder value by splitting the company, force people to value the design side for the value it's bringing, but then value the foundry side because there's a lot of capital there, and fabs are important. It doesn't solve the problems. You still don't have as strong process, and you still don't have the strong design. You've created value, and then that value slips away unless you can fix those core problems and compete.
Right. Got it. Got it. Actually, I want to talk about memory, but before I do that, I've got an audience question here, and he's asking, let me paraphrase it. Do you think, the leadership premium of NVIDIA versus, a lot of the other competitors is already in the price, or do you think there is still more to go?
The way that a lot of my customers talk about looking at NVIDIA is they look at it as trading at 30 times what they think the real earnings potential is. I think that's been pretty consistent over the last few years. And so I think the leadership premium is baked in. The question is more, not so much should they be trading at 20 times, 30 times, 40 times. It's rather, again, I think AI is going to be a fundamental building block in 2027, 2020, or 2030. But do you have some sort of bubble in, say, 2026, 2027, where you have to wait for the applications being built on this new building block to show up, and you see a bit of pause in investment, or does that never happen? Because those applications show up, you start moving value from human labor to compute, and that just ends up with more spending compute. I think that's the question. And what is the earnings power? What is the revenue growth? Less so than, is it at the right multiple right now?
Got it. Got it. And so how do you think about memory going into 2025?
My view is Q4 and Q1 are difficult quarters. What we're seeing on the client side is people talk about demand being bad. Like I told you, PCs are bad. I told you consumer spending's bad. It's not a demand problem for memory. It's an inventory problem. All of those customers bought a bunch of inventory at the end of 2023 when pricing was really, really cheap. And then about middle of this year, they decided we have too much inventory. There hasn't been a recovery, so we're going to work that inventory down. I think that's the predominant the predominant struggle for the memory vendors right now. I think that end of Q1, Q2, a lot of that inventory gets worked out. There hasn't been much spend other than HBM.
Right.
So I think certainly for NAND, you end up with a better NAND environment by the back half of next year. With DRAM, you've got a bit of a more difficult market to project, because you have this HBM market, which is really lucrative. But then you also have the risk that if HBM slows a little bit, or if Samsung can't get things right, does some of that get returned to commodity DRAM? And that's really the only place you have supply coming on. So does that create oversupply? I have a little bit less visibility there. But I think more generally, expectations are too low for what bit growth is going to be. There's not a lot of spend. And so I generally think second half of 25 ends up being much better than what's going to be a difficult next 3 months for memory.
Got it. Now, you say that storage is actually one of your favorite themes. Now, can you give us a little bit more color on that?
Yeah. So when you think about storage, kind of like I said with memory and when I was talking about NAND, data growth over the last 2 decades has been somewhere in the 30% range per year. That's what dictates storage requirements. And we had disinvestment at those large customers from 2022 through early 2024. And so I think right now, Amazon, Google, Microsoft, they're still trying to catch up in terms of buying storage. And so there are 3 different names there that I like for 3 different reasons. We'll start off with, they're trying to catch up buying hard drives. So hard drive dynamics are good. That's good for Western Digital. That's good for Seagate. With Western Digital, you have a catalyst in Q1 when they split the company. I think right now, all the value is in the hard drive business. When they split it, you have to value the NAND business as something. If you take Kioxi's valuation, apply it to Western Digital's SanDisk business, it's an incremental 7-8 billion in value that's created. That's why I like Western Digital. With Seagate, they told us last week that they have qualified their new HAMR technology at a large customer, which everyone believes is Google.
Right.
They have, with that technology, I think end of next year, they're going to have a 30% capacity advantage versus everyone else. So you take a business that is a commodity business and you turn it into a differentiated business. And I think that allows them to lift pricing. It allows them to lift margins. It allows them to gain some share. And so I think exiting 2025, they're in a different business than they've been in a long time. And you're coming off a cyclical peak, because I just told you hard drives are really good. And so I think 2026, 2027 are really good years for Seagate, because I think they're going to move from being, again, a player, a price taker, into effectively a monopoly for this high capacity drive. The last name I really like is Silicon Motion. There, it comes down to 3 or 4 factors. One, they've been outperforming the last year. I think that they've been enabling China with YMTC and CXMT, the Chinese memory players, because they need controllers. And in particular, their Silicon Motion is the only supplier of controllers for handsets. 2, they've talked about their new product in enterprise. Historically, they've been all consumer. Now they have this chip called MonTitan. It's a controller that goes into enterprise SSDs. They've talked about having 2 customers. One of those customers, I believe, is Pure Storage. And so they've got a tier 1 US customer and a tier 1 US customer that just told you that they want a big hyperscale project. I think they benefit from that. 3, auto isn't a big part of their business. They've talked about winning sockets at Toyota. That ramps in 2026, 2027. They said that can be 10% of their business. So again, another new addition to their TAM. And lastly, they're in a dispute with MaxLinear. MaxLinear offered to buy them, then walked away. You can't walk away from a deal. So they're going to Singapore arbitration in October, I believe. I think they come out of that with at least the break fee, which was $5 a share, and possibly substantially more. So there's in my mind likely a big adder to their cash position, which is already $10. So nearly 20% of their value.
Got it. Excellent. So final question, Matt.
Yep.
What do we buy for 2025?
Again, so my favorite names, Western Digital, Silicon Motion are both on Wedbush's best idea list. But I would add Seagate to that, as again, if you look at my numbers, I have them doing $18 in 2026. So if I'm right, there's significant upside from here. And then if you like a large cap, if you want more exposure to AI, I think it's Taiwan Semi. And with Taiwan Semi, you get all that goodness that we talked about in the AI supply chain. And when you're talking about, where values maybe not captured in the stock, Taiwan Semi has gone over the last 3-4 years from being a competitor to Samsung and Intel to having a nearly monopoly position in terms of high-end semiconductor manufacturing. I don't think the market really realizes that, and you can somewhat see that in that Taiwan Semi didn't really benefit from the fact that Intel fires Pat Gelsinger, and that tells us that something is still amiss at Intel. And that's good for Taiwan Semi.
Got it. Thanks, Matt. Thanks for joining us.
Thank you so much for the opportunity.
Okay, so last few minutes of the show, let's have a quick look at what's coming up. On the 13th, we've got the Singapore unemployment rate out, and the 16th, we've got the Nodex numbers out. And then we'll be looking at inflation just before Christmas on the 23rd of December. In terms of upcoming events, we're going into the slow period of the year, so nothing major to report. But do join us next week for our final Market Monday picks for the year. With that, thank you so much for joining us, and have a profitable trading week.